So I'd also just like to take the time to once again remind you of the current divergence taking place between that of the transportational average and also the industrial average. Now, again, this has been forming really since about mid-July, where we started to see the transportational average turn down. What I'll do, I'll just overlay this chart with that of the industrial average. So you can see these two markets. I mean, I'll have to close them to line or closing prices. But as you can see on my screen right here, it really wasn't until about mid-July where we started to see these markets diverge. This is quite troublesome again, especially up and around macro resistance areas, because if you also pay attention to that of the horizontal lines on my chart, this is exactly where we started to see that of deviation. The deviation more or less started at those upper resistance areas. What we're seeing at the moment is one market not confirming the other. We've got the transportational average pulling back down from what was appearing to be that of a bullish outbreak. You might be asking yourself, well, why is this important? Generally, according to Dow theory, we need to see these markets in agreement to confirm the legitimacy of the trend either higher or lower. And at the moment, obviously, these two markets are bifurcated. Now, the Dow Jones Industrial Average again closing up, the transportational average today trying to push on up. There's something about this move taking place in the transportational average which has me a little bit concerned. It doesn't seem all that truthful. I mean, since we've come back down to the support area down here at 9,225, yes, we have seen the continuance of a couple of bullish candlesticks. I mean, we almost have a hammer at support. We have a relatively ordinary bullish day. This took place on Thursday last week, the continuation on Friday. Today, I mean, this is the fourth candle since really seeing the turning point off from the support area. It left us with that of a doji candlestick. So, I mean, even if we start to bring up these exponential moving averages, prices back below the exponentials, we're trying to bounce off from the long-term simple moving averages. Now, again, this is a little bit contentious whether or not this is some form of a bounce off from those macro support areas during this bullish trend. A lot is to be sort of answered for at this particular point. But I can really sort of break this down quite simply for you. So if you're listening to, or at least listened through to, I guess, this part of the video, this is really the key to take away from really, I guess, the narrative, or at least what I want you to, to learn from in terms of legitimacy of the trend breakout. What you need to ask yourself right now, at least what the transportational average needs to prove to you, is that it can, first of all, get back above 9,560. You want to see this market get back above this this resistance area over here at 9,450, and also above and close above this level up here, coming in at about 9,600. So I did just say 9,560, but it is more so about that 9,600 figure. So you should write this down on a notepad for yourself, the Dow Jones Transportational Average, and write down this figure, 9,600. That is figure number one. Figure number two is much more important, and this is coming in closer to 9,800. You can see on my screen 9,750. This is sort of coinciding with the peak which we saw on the 14th of July. But really the major figure, number two, is 9,800 to 9,750. This is the key for these markets continuing further into 2017 and also possibly into 2018 and indefinitely. The longer the transportational average stays below this swing high and below these two areas, these respective areas of resistance, you have to become a little bit concerned, especially if the industrial average continues to push up further. And what I can also say to you right now definitively is that, look, if the transportational average finds a lower high somewhere in this vicinity, if it starts to roll, and if we take out this swing low over here, this 9,087 bearish trigger is going to be taken out, and we're going to see candlesticks such as this, which showed up on the 27th of July, and we're going to see a hard reversal in the transportational average. Now, just to confirm this also, really to extend this to an additional market, we've got of the Russell, that of the Russell 2000. Now, again, this is incorporating more market breadth. It's just encompassing more stocks. So as you can see, there's 2,000 stocks comprised within this index. Now, very similar to that of the transportational average. Again, we've turned down. We've actually pushed below this green box, and we're closing below, once again, this resistance area, which has been rather problematic to overcome. We found a short-term bottom, a little bit of a reversal taking place really Thursday through to Monday at the moment. We're trying to push off from these rising exponential moving averages. But once again, if you start to see a lower high set up on the Russell and begin to turn, this is going to be confirmation on two markets relating to market breadth and also non-committal state of sort of counterpart markets as well, which is what we would expect to see when we have the Dow, the S&P, and the Nasdaq up at these highs. And generally, market breadth is the first indication, along with, of course, divergence, macro negative divergence on larger fractals outside that of the daily time frame. So I'm really just talking about the weekly and monthly time frames that you need to look out for, especially with markets up and around these historical highs or continuing to push up into fresh new all-time highs. So obviously, this conversation, it extends to that of the Russell. I've recapped that of the transportational average as well. And again, this is just, once again, a very friendly reminder to you. You can do what you want with this information. You can sort of disregard it. You can write it down. You can be mindful of it. It's your choice. But I've given you the framework, essentially, of what to look out for. And these signals, very, very strong, very powerful, very reliable. And they're diverging. I mean, at the end of the day, they're diverging, and the warning signals are there. So this is coming to you in good faith. This is James signing off on behalf of Pivot Point Trading. Email me if you have any questions. Until next time, keep well. Farewell.